trades that could turn out to be quite profitable, as you see there. So I'll be talking to Tony about that. Tony, can you tell us, before we get some questions, there's a lot of people had some questions for you that I'll type out and I'll say for you. But maybe you can tell people a little bit more about you when you first started trading, which is very interesting story, what you started with, what your bankroll was, and what you ended up building it up to. And then we can get to some of the questions. But it's an interesting story how you built it up to such a big account, guys, just by focusing in on a lot of these longer-term type swings.
Yeah, be happy to. I started with $5,000, and guess what? I lost my first 3 trades. I lost my butt, you know. I was so angry, and I took 6 months of charting before I even started trading. I got whipsawed. It was a terrible feeling. By the 3rd whipsaw, I knew what had happened, and I said, I got it. Fortunately, I didn't have a lot of money on the trades, so I didn't lose a lot of money. And I recommend when you first start trading, you don't want to use a lot of money. You know, just if you think you have a system of doing things or a method, maybe 100 shares. That's all you need until you get the hang of it. Fortunately, I have one of the best technical analysts in the country. That's Uncle Steve. Frank knows him. He taught me an immense amount. So I had my $5,000. I got, you know, $5,000, and I traded with Uncle Steve, and it was a totally mechanical system. In the first year I traded up that 5,000. Well, let me tell you, KLAC, MCHP, Chevron, XOM, KSS, you know, stocks like that, they'd move $7, $10 in a day. Not like today. So my very first trade I made was KLAC, and I put all $5,000 on. It was $48. And it went up $7. So I felt like a bandit. So I just kept trading with Uncle Steve. At the end of my 13 or 14 months, I had made about $48,000 with Uncle Steve. But I knew the charts. You know, I was beginning to see a lot of things in them. And with its mechanical system, as all mechanical systems, there's flaws in them. And when his mechanical system was saying get out, I could see that I could stay in and pick up, you know, 10, 20 more cents. It was very simple. As when the mechanical system said buy it, I could see I didn't need to buy it because there was no candle signal. So what I was looking for was a candle. And I did use the stochastic back then. I like to see the candle setup and the stochastic setup. That's simple. So then over the years, you know, I've been trading for 8 years. I cleaned out my account when it hit really big. I mean, really big. And, you know, I help my kids out. I've helped people out. And right now I'm building up again. I'm just trading about $38,000, $40,000 in my account. And, you know, with what I know, I hope in the next year, 14 months, I can turn that into over $100,000. Not hard to do. You just have to follow rules, be very disciplined, and, you know, have a smile on your face all the time, because trading is a lot of fun. And, you know, if you take a little hit, big deal. You follow your plan and you move on. But that hit that you took, you don't want to forget about that stock. You want to keep it on a watch list, because it's more than likely it's going to go up. And so that's about it. You know, what I do with my money, you know, I help family out. I have trust set up for college, you know, for 6 kids in the family. I'm helping my son buy a house right now. What good's the money going to do me, you know? I have a good income. My wife works, she makes a lot of money. And so my pleasure in life now is just teaching. And my greatest pleasure is seeing people succeed. And that's about it, Frank.
I think we got a similar passion with that kind of stuff too. I love to teach as well. I remember when I first when you were still telling me in the background in the old group, show me charts and things you liked, and you were a little bit hesitant to share with people. You didn't want anybody to get hurt. And I said, "You've got amazing knowledge here. You got to start sharing it." And I'm glad that you did, and you helped so many people. But Tony's got a passion with real estate as well, which we both have as well. We used to talk a lot about that in the past as well. Um, okay, let's get to some of these questions. How long do you hold some of these? Steve Shank had a question. How long do you hold some of these swing trades, Tony? And how do you screen for these type of stocks?
Okay, I'm going to show you how I screen right on my stock charts right here.
Just scan for a lot of these stocks breaking those $10 levels, the dollar levels. Tony loves those type of trades as well, and I'm sure that's one of his scans. And he also loves the tweezer setups and a lot of the candle setups that we still use to this day. So if some of you know that when I talk about tweezer bottom, tweezer tops, shooting stars, hammers, same type of thing that Tony likes to look for on these setups. And remember I've said in the past about with those moving average crossovers, they get you that meat of the move, but it doesn't get you in as soon or right at the highs. And you saw what Tony said about that, to use those candles to your advantage as well, that they can get you in a little bit earlier. But if you're interested just in an easier trade, just for the meat of the move all the way up, or if you're shorting all the way down, because you can use that same technique for shorting, then you can see that it does get you in a little bit sooner. That's what I like about Tony. He doesn't miss the whole picture, but I love the way he keeps things simple too. Very similar to my way of teaching. There's the scans that Tony does. Go ahead, Tony. I'll let you go on with that.
Okay, this is what I do, and anyone can do this on stock charts. First, I go in, I go through the 52-week highs here and here. Now, you see that we have 314 and 134, so about 450 52-week highs yesterday in that market. That's amazing, huh? Okay, on this same page, I can go down and look at these candlestick patterns right here. When you get used to doing this, you can go through all this part really very quick. 5 minutes, you're all done. And then I create my own scans here. And to be honest with you, Lakota Eagle did these scans for me because I'm not very technical. Even though I can read a chart, I hate the technical part of putting all this stuff together. So this is, he asked me what I wanted, and I told him. And, you know, I hate guys like this. In a couple of minutes, he has the scan all set up for me. But here it is. I have an 834 weekly scan. I have an 834 daily scan. I have a 920 cross scan. These are 834 weekly cross scans. I have a 38 scan because I want to see some stocks that are coming off a bottom. My best scan, increasing volume for 2 days. That's a beauty. And then I have an ascending triangle scan. And then when we get some down market, I look at this one here. Pincher plays, bottom. Now the pincher play is when the you have the PPO on top, price oscillator, and you have the ADX on the bottom. And it's when the ADX line and the PPO, they come together and they form a pinch. And then it's when you see that divergence, they start going their opposite direction. That's where you get into the trade. That works very well. So I have 1, 2, 3, 4, 5, 6, about 7 scans here that I do every day, except, yeah, well, I do them every day. Any other questions?
There's a whole list of questions here, Tony, for you, but we'll try to get to as many as possible, guys. We might not be able to get to most of them. Tony, you said this is from More Chocolate. Read the Smart Money and Guidance. What clues do you look for?
Oh, on the for market sentiment, is that what he means? Or does he mean how can I tell when smart money is taking control of the stock? It's kind of the same difference.
Uh, Chocolate, maybe type out again. Is that what you mean when the stock, when this money starts coming in and pushing the stock up? Yeah, when the smart money takes control, Tony. Exactly what you thought.
Well, pretty easy to tell. I remember I was talking about thinly traded stocks, and the one key that you look for, you look at the overall picture. You want to see the downtrend, or you want to see a base being formed, and then you start noticing the price inching its way up, and those are good signs when you see it inching its way up. Yeah, here's how I tell. Let's say you have a stock that trades 10,000 shares a day. You take the monthly average, it comes out to about 10,000 shares. Then all of a sudden, you see 20,000 shares, and I'll post that. I'll say this looks good. It's trading 20,000 shares. We have a little volume coming in, and people say, "Well, I'm not going to trade that. That's thinly traded." And then the next day, you have some more volume coming in. Let's say double that, so you're up to 40,000 shares now. Now, 40,000 shares is a lot of trading for that stock that was trading 10,000 shares. So the third day, I'm waiting for the volume surge. And that's smart money. That's the game they play. They're taking the stock up a little. They want to take it up high enough where they get the volume surge, and then the public gets on it, and they really suck it to the price, moving the price way up, and then they back off. As soon as they back off, the public's going to be stuck holding the bag, and the price is going to start coming down, and they're going to start picking up more shares of the stock. It's
So
very easy
above
to.
average, so above average volume, guys, and